Every person has a desire to be a millionaire or wealthy. Millionaires today have amassed their wealth in a variety of ways. Each of them has a unique success story to tell. Almost everyone wants to be a millionaire, but few work hard enough to make it happen. People say that making the first $1 million is the most difficult. $1 million, however, is no longer worth what it once was. One must understand that success is not by chance. To become a millionaire, you must be willing to take risks, think critically, and be a good manager in your daily activities. But we must all understand that just because we have earned $1 million does not mean we will spend it so quickly. One must save more than he spends. So today, we'll go over the best ways to spend your $1 million. Hi everyone, welcome back to the Life of Luxury. Savor the flavor of exploring wealth, where we post videos about life and luxury. Join us on an exciting video as we explore the wonderful lives of the elite. We are absolutely thrilled to share our knowledge with you. If you are new here, please subscribe and hit the notification bell so that we can continue to post videos on this channel. And don't forget to leave a comment and we'll make sure to engage and start some interesting discussions with you. Here are 15 ways to invest $1 million. First, buy rental properties. $1 million invested in rental properties will generate between $50,000 and $100,000 in rental income per year. And this is pure cash payment for your properties. You have many options: single family, multifamily, commercial spaces. Anyone with $1 million can buy a couple of apartments near the city center or around business centers and live off the rent. However, keep in mind that $1 million will not make you wealthy. But if you know how to manage it properly, it could mean you'll never be poor again. Also, did you know that the average property increases in value by 3 to 6% per year? So that is a good option because you're not only bringing in rental income, but the property's value is also rising. People mistakenly believe that if you win $1 million, you will stop working. If you do that, your $1 million will definitely vanish in an instant. The second option is to invest in a real estate investment trust. In relation to number one, instead of losing your $1 million in an instant, why not put it in a management fund? The fund's managers go out into the market and invest the money in properties that generate income. The money that comes in is then divided by the amount that each person has contributed to the fund. This option is ideal for people who do not want to deal with the day-to-day management of their rental properties. You may also benefit from it. It's critical to understand that if you're willing to put in the effort, you can get better results on your own. Third, lend your money through bonds or CDs. Bonds are our favorite option so far because they are so simple to understand. It simply entails lending money to a corporation or the government in exchange for a fixed amount of money paid out on a regular basis. When the bond's deadline passes, you are reimbursed for your initial investment. If you require the funds, you can sell the bond to others or return it to the bank before the term expires. They range from 2.5 to 6%, and you can't purchase government bonds. On the other hand, CDs, or Certificate of Deposit, is another financial instrument in which you agree with the bank to leave your money untouched for a set period of time in exchange for a higher interest rate. However, unlike bonds, this is less flexible but adequate as a savings account. Personally, we do not recommend keeping your money in a savings account for more than a short period of time. Why? Because it's the same as having money that loses value every day. The bank pays you only 0.01% per year, to keep your money in a savings account, and the average inflation rate is only 2.44. To put it in another way, if you put $1 million in a savings account for a year, you will end up with only $100. Inflation is also a consideration. If inflation occurs, there is a possibility that you're losing far more than you're earning. So if you are able to lend your money through bonds or CDs, please click the like button below. Fourth, convert your money into gold, silver, and other metals. If the impact of inflation on your wealth has scared you, converting your money into gold, silver, and other metals is a safer bet. Actually, multi-millionaires do this to ensure that their money retains its value. When governments mess with the economy, smart investors move their money out of the market and into gold, the go-to resource. This is what investors did in 2020 when we experienced the COVID-19 pandemic. They moved their investments into gold for the medium term. However, even though the price of gold rises, the value remains constant. The fifth option is index funds. When Warren Buffett was asked, "What would you tell someone who is 30 years old, unmarried, and has no dependents?" Buffett stated that he would definitely invest in a Vanguard index fund and return to work. Warren Buffett experienced it firsthand when he wagered and won a $1 million bet on an S&P 500 index fund. Buffett's victory may be reason enough for some investors to begin adding index funds to their portfolios. Indeed, it can provide you with benefits such as broad diversification, low costs, and attractive returns. At number 6, the stock market. Nobody statistically beats the market in the long run. However, great opportunities will occasionally present themselves if you are willing to take the risk of investing in the market stocks. What is the best strategy for investing in the stock market? You can begin by investing a small amount of real money and then playing it safe. Don't worry, as time goes on, you will undoubtedly learn more about trading with these stocks. You can also study on the internet. There are numerous stock investment platforms to choose from. Number 7, start a business. If you had $1 million to invest in a business, why not your own? Yes, you will bear all of the risk, but you will also reap all of the rewards. But don't get caught up in the trap of overspending. Anyone who has money can make money. The goal is to create some while not spending any money. We created a video titled "Exposing the Secret to Building Wealth from Nothing," which we highly recommend you watch. Next, at number 8, angel invests. If you believe that starting a business is too difficult, you can invest through angel investing. It is when you provide capital and expertise to a new startup business in exchange for a percentage of the company's income. However, this is the most risky option on the list. No matter how good you are, if the company you're investing in isn't capable of taking the project where it needs to go, the project will fall, and your investment will fail as well. Number 9, venture capital fund. Rather than picking 1 or 2 startups to invest in, you can take the index fund approach and pool your money with other investors to diversify your investment and reduce your risk. This is how venture capital funds were created. Your $1 million investment could help 10 to 20 different businesses. But we would not recommend venture capital as the primary investment option for first-time investors. There are far safer ways to proceed without risking it all. Number 10 is crypto. For many years, gold was the best option for securing your money until Bitcoin came along. This is also known as Gold 2.0, or the Internet generation's gold. We believe strongly in blockchain and what it will do for the world in the future, and the idea of storing money that no government can print more of is appealing to every investor out there. Number 11 is peer-to-peer lending. Peer-to-peer lending is the old practice of lending money to someone and having them repay you with interest. There are numerous peer-to-peer lending platforms available online these days. So some of these platforms will make big promises of 12 to 15 to 20% annual returns, but never considered as a long-term strategy. It may only be suitable for those of you with limited capital and a high risk tolerance. Next, at number 12, invest in art and collectibles. Art is the last unregulated market, with prices constantly rising, at least when it comes to heritage pieces. Few people are aware that blue-chip art has outperformed the S&P 500 over the last 20 years. The only issue here is where to begin. Again, there are numerous platforms available online that allow you to invest in art in the same way that you would a venture capital fund. Our advice is to never invest more than 10% of your net worth in alternative assets. Number 13, purchase a franchise. $1 million will get you at least one popular franchise. Franchise businesses require a significant investment, but they provide you with the necessary equipment, training, and a well-known brand. Let's say you want to open a Starbucks franchise. You must pay an initial fee of between $40,000 and $90,000. This includes the hardware and branding, and a net worth of at least $250,000, with at least $125,000 of that liquid and ready to pour into the business to cover the initial running costs. Another example is McDonald's, which costs around $45,000 to franchise, once you factor in the property costs and the initial day-to-day capital. There are also less expensive options, but keep in mind that a good location for your business is essential. Number 14, land. Land is an excellent investment. You buy the land, hold it for a while, and then sell it for a huge profit. You could also pass it down to your children over time. The basic formula is to buy land 30 to 50 kilometers outside of any major city and wait 20 years. As the world's population grows, so will your investment. Even selling a small portion could be enough to cement your wealthy status. Lastly, emerging markets. It is all about emerging trends and developing countries. For example, we already know that India has a large population, and telecom is a thriving business there right now. This means that nearly 1 billion new people will join the online marketplace in the next decade. These individuals will need to buy, sell, trade, and use services, among other things. The other consideration is emerging trends. Tesla is a prime example of this. This car's conversion from gasoline to electric is part of a larger trend. See, there are numerous business opportunities in emerging markets. Now we're curious. How would you invest $1 million if you had one? Let us know in the comments. Before we conclude this video, we'd like to remind our viewers that $1 million does not make you wealthy. Today, $1 million would not have been enough to never have to worry about money again. Times have changed, and things are becoming increasingly expensive. So look for business opportunities. Set lofty goals for yourself. Remember that big goals scare people with limited vision. That's it for now. If you enjoyed the video and found it useful, remember to subscribe to The Life of Luxury for more videos to help you explore the wonderful lives of the elite. Make sure you hit the notification bell so that you won't miss out on any of our uploads. See you in our next video!